Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I've got Craig Dickens, Merritt Harbor Capital, on the show with us today. Craig, welcome to the show.
Thanks, Michael. Appreciate it.
All right. Now, you're a true serial entrepreneur, CEO, certified M&A advisor, investment banker, angel investor, and now you serve as managing director and founder of Merritt Harbor Capital. Tell me, you've been on both sides of the deal, buyer and seller, entrepreneur, and investment banker, investor and seller to public and private companies. What can you tell entrepreneurs and investors how to best align their interests and achieve great results?
Yeah, absolutely. Thank you for that question. Appreciate it. It's a pleasure to be on the show. Entrepreneurs often start with a lifestyle business. They have an ambition. They want to feed their family. They want to send their kids to college and enjoy a great life. Turning their company into an investment grade company takes a little bit more. And I think ultimately, private equity investors, strategic investors, they're looking for value in that transaction. And they want something that they can grow and scale. Because theoretically, if they're going to pay you top dollar, the only way they win in that investment is to grow the business and create additional value. So that really starts with preparing the business through the eyes of a buyer. What does a buyer want? A buyer wants sustainable revenue. A buyer wants a great leadership team. A buyer wants something that they can grow and scale. And again, making that shift from working in the business to on the business is probably the best mindset shift an entrepreneur can make to prepare to become investment grade.
I agree. Now, the driving force for value in middle market business and investors, tell us that.
Really, it's a combination. If you really only remember three things, obviously earnings matter. You have to have sustainable earnings going forward. Growth rate. If you're flat or if you're on the maturity side of the life cycle scale, you have to find a way to get that growth. Every CEO is approaching M&A as a growth driver because most companies are only growing 2 to 5%. So they realize that growth is kind of where it's at. And then ultimately, you have to have a plan. So many buyers, fall short when it comes to dealing with entrepreneurs that say, gee, I've taken it to this level. Here you go. Here's my baby. You figure out what to do. You have to give them that roadmap. You have to say, if I were you and I had access to capital, here's how I would grow the company. And having those three things are key.
All right. So when the music stops, you still have to deal with high valuations and multiples. And you've got to be able to explain them and achieve them. Talk to us about that.
Yeah, again, it comes in the preparation. In today's market, it is a frothy market. Multiples are as high as they've ever been. Private equity is sitting on, $1.7 trillion worth of dry powder, and they realize, along with strategics, that the returns capable in a middle market company are pretty significant. So they're coming down market. They're looking for those companies that really are a premium company. And when I say premium, premium companies, those that attract those highest multiples, have growth rates that are significant and better than their peers, 10% plus over the rest of their peers, and same things on the earnings side. The earnings, if you want to attract top dollar, you've got to be, 10% plus your peer group, and those premium companies are getting snapped up at very high multiples.
Okay, give us an example of any number that you can come up with for an extremely high multiple. What does that mean in numbers?
It varies by industry, without boring you with a ton of stats, but, the highest multiples are being offered, obviously, for technology companies because of the mass amount of disruption and kind of this, whether you're in manufacturing or other, this industrial 4.0, healthcare, even with previous uncertainty, healthcare multiples. The overall market for middle market companies, we're seeing multiples in that 10 plus range for those premium companies. Typical company, old line company growing at a modest rate, you can expect in today's market, a 5 to 6 multiple. So it really depends on the industry, but certainly tech and healthcare are the leaders in terms of attracting the highest multiples.
Thanks for that. All right, now what about strategies? Because you've got business owners who've got diversification issues, 80% of the net worth is tied up in their illiquid companies. There's got to be some answers in that one.
Yeah, I would say along with all that capital competing for your company, the amount of creativity in the marketplace and among capital providers is better than it's ever been. There are dozens of options to either have a partial liquidity event. You don't have to cash out and go sit on a beach somewhere or figure out how to play golf 5 days a week. You can do what's called a minority recap. You can take some chips off the table, sell 20, 30, 40% of your company, still run it, still have fun, have a great partner at the table. You can sell a majority of the company, 80% to a private equity partner. And again, whether you run it or not, that's kind of up to you and the private equity partner, but there are a lot of ways to achieve liquidity and achieve diversification and eliminate some of the risk. Most of the sellers that we work with, having debt over their heads is pretty uncomfortable, especially as you get a little bit older. So it's a way to kind of de-risk your investments and start to think a little bit broader from a diversification standpoint.
Good, thank you for that answer. All right, on the other side of the spectrum, investors. We have a show. A lot of people come out to watch who is the next company they can invest in. So talk to me about the investor side of it, taking advantage of what we're seeing for the potential returns of making a direct investment.
Yeah, direct investment is huge, right? We have individual investors investing in companies. We have family offices, obviously, as an asset class, looking for more direct investment. You can, depending upon your appetite and your risk profile, it's pretty easy to get involved in a direct investment these days. Not to be self-serving, but if you call an investment banker with a mandate saying, hey, I want to be in this space because it's growing and either I understand it or I appreciate their thesis for growth. We go out and find those preemptive kind of not for sale companies all the time for people looking to make direct investments. So, again, people are with the demographics of all the baby boomers needing to find succession. We're able to have interesting conversations with companies about, accepting direct investment, whereas before it was kind of like this is my baby. They need a little bit of coaching through that process, but we do that all the time for people looking to make direct investments.
What about private equity's role in today's investment landscape?
Yeah, I really think, today's private equity is not the private equity of the 80s. These guys are talented, smart. They know how to align with a business. Gone are the days where they come in and tell you what to do and just cut heads and, financial reengineering is their main MO. Private equity is really valuable to middle market business owners as a viable path to exit. And it's expanding the opportunities. And as I mentioned earlier, the creativity side of things, the entrepreneur is the bride in this market. It's a seller's market. So you do get to dictate some of the terms and you get to kind of fulfill your vision while at the same time de-risking because private equity is making a substantial investment in your company. So it has become a very robust market in private equity. And a lot of times they can move a lot faster than strategics. So for somebody who really wants to make sure that they have certainty of close, private equity is definitely the way to go in terms of having your cake and eating it too.
Or being able to be a bridge until you find the right strategic. I get it.
Yeah, absolutely. Absolutely.
Craig, it's been a pleasure having you on the show. I hope to have many more conversations with you as we go forward. I've learned a lot today.
Great. Thanks, Michael. Enjoyed being here.
My pleasure. You've been watching CEO Money with Michael Yorba. Thanks for following us. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.